Hello, traders. Gary Wagner here. Approximately 11:06 in Honolulu and 5:06 in New York on Monday, 25th day of April, 2022, and this is the Daily Report for Gold and Silver. A strong sell-off across the board in the precious metals markets today. Gold currently down in excess of $35, below $1,900 at $1,899.10. We did go long late last week at $1,934. However, we kept our stop extremely tight at $1,927, so we only had a $7 per ounce risk on the trade. Stops obviously were hit. I draw your attention to current pricing in relation to the 50-day moving average. That is the primary focus of today's opening letter, and we will discuss that in lengths along with our new revised current strategy when we pull up our technical studies. Silver was also down by 2.35%, currently fixed at $23.69 per ounce. Platinum was down about 1.6% at $1,911.70, but the big drop today came in palladium, down about 12 or 13% at its low. It has currently settled down $254, still the most expensive of the precious metals, but today experienced a decline of 10.70%, and that all occurred partially due to dollar strength, with the dollar gaining approximately 0.6%, currently fixed at 101.775. My sense is that we might have seen a peak in the dollar, and I also believe that the sell-off in the precious metals is overdone. We are looking at a daily chart in candlestick format with our three primary moving averages, the 50-day moving average in green, followed by the 100-day in blue, and finally, the longest term that we use, a 200-day moving average in red. On Friday, market forces did take gold pricing lower, but it closed, as you can see, right at its 50-day moving average. I then had tentatively believed, incorrectly, that we should see support at around $1,927. That was based upon a Fibonacci harmonics using two distinctly different data sets. However, forces continued to move gold pricing lower today, and it opened below the 50-day moving average, closing well below that, down $35 and below $1,900. In terms of our current strategy, I believe that support begins at approximately $1,885 per ounce. I'm really looking at a series of lows right here and here. These occurred towards the end of February, and below that, I'm looking at the level at $1,871.50. That is the current fix of the 100-day simple moving average. Based on the assumption that I believe that current pricing has put gold in a oversold scenario and that we have tentative support between 1885 and 1871, we are going to look to enter gold on a dip if we can get it at around 1880 to 85. That allows us to go in with a good risk-reward ratio, putting our stop below 1871, maybe 1869, and keeping our risk factor low while having good upside potential. If the opportunity does present itself for us to be able to buy gold at that price, we will act and send out the appropriate trade alerts via email as well as SMS text message. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.